Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, Vice President of Research at Likefolio. We'll also bring Kevin back in. Megan, happy Friday.
Yeah, happy Friday, guys. Thanks for having me.
All right, so we're talking Uber in the news today. New partnership announced with GM's Cruise unit for autonomous vehicles, but stock's up about 20% this year. It failed in August, fell pretty sharply, but are you guys having positive data on this one? Because their last earnings report was actually really good.
Yeah, so this is actually one of our favorite long-term plays in the autonomous vehicle or autonomous driving sector. Whenever we look at data for Uber, we can look at this with a short-term lens, or you can look at this with a long-term lens. And I think that long-term is where what true adoption of autonomous vehicles does for this company, which we think is pretty transformative. But even short term, whenever we look at just digital traffic for Uber versus peers, we see Uber as the clear leader with traffic up by over 20% on a year-over-year basis. So I think that that's strong. Whenever we look at app data, we can see Uber app usage for its rides and its Uber Eats segment up year over year. And so this is a company that is doing really well. It's got, at least in terms of the consumer psyche, whenever you see this chart versus other, delivery names, you can kind of think of Uber as a major, last mile delivery player. We can see, okay, according to this chart, you can see rides are doing better or driving more interest from consumers versus, say, its Uber Eats platform. But we do see positive traction in both. So for us, this tells us consumers are still relying on Uber just in the short term to splurge on those experiences and utilize its services. But long term, we see these partnerships that are stacking up with autonomous vehicle companies, from Cruise, like you mentioned, to even Waymo. I think that Uber has partnerships with BYD overseas. So this is really strategic and one name that we think is set to really benefit from this switch. And we're kind of in a hybrid era right now where there's still a lot of logistics, still a lot of hurdles from legislation to actual technology hiccups that have to work out. But if this does roll out and become the mainstream, that now you just call your Uber instead of a driver, it's a car that's showing up to pick you up and drop you off, I think that that's pretty revolutionary.
Megan, Uber is all grown up now. It's doing things that we frankly never thought it could do and get to, which is profitability, right? Their app is now scalable and it's working, and it's now, no one's ever gonna stand on a curb out in the middle of traffic and hail down a cab again. That's gonna grind down to almost nothing, because Uber's been able to make this profitable and make it through, frankly, a period where a lot of people thought they weren't going to make it through. But the question here is their ability to deliver not just people, we know that, but other things. When does that start to contribute? Are you seeing any traction, any real contribution to their bottom line from all the other things that they can deliver besides people?
I think that on its last earnings report, there was a nod to this, that there was a larger or a more diverse breakup in its overall revenue in terms of, revenue sales generated from rides versus sales generated from its Uber Eats app. And I think that that shift is really important to watch. I think Uber Eats now accounts for about 43% of the revenue last quarter. Check me on this, but I believe that's correct. And it was, the rides used to comprise about 70% of sales. So I think that this shift is really important to show that consumers are taking, the fact that Uber now has an app that you can call a cab, if you will, or you can order McDonald's and you're going to the same location. This concept of this, super app, this ecosystem that we really saw pioneered by Square, or I guess Block, you would say, is working really, really well for Uber in terms of user engagement.
Megan, you look at happiness levels. Lyft actually got upgraded today, but they've been you're not doing too well as far as the share price goes. But when you look at happiness levels and the fact that, hey, if they get this autonomous thing right, Waymo's already doing it out in San Francisco right now, and I guess it's doing really well at this point. Is that, your longer term view here from your data that just supports even more riders than the 156 million they've got right now?
Yeah, I've actually seen some of my friends that live out in San Francisco post stories on their social media from inside a driverless Waymo. So I think it's incredible that that's in action. But yeah, I think that whenever you look at an Uber versus a Lyft, you're looking at two kind of different companies with two different outlooks of what Uber wants to be when it grows up and what Lyft wants to be when it grows up, to use Kevin's analogy. And Uber is thinking, I think, much bigger and has much larger goals. Whenever we look at happiness levels, we do see Uber with a 6-point edge over Lyft. And now I will say happiness is only about 55% positive, but I'm sure you can imagine the type of mentions that we're reading whenever we're searching through these Uber mentions and these Lyft mentions. People love to share the bizarre stories and not necessarily as much just the regular typical ride stories on their social media. But I think that growing edge that Uber is locking in has partly to do with the experience that it provides and also the breadth of services that it provides, moving things, outside just people from point A to point B.
All right, great stuff, great data as always, Megan. Appreciate it. Have a great weekend.
Thanks, guys. You too.